So the other day I watched The Big Short. Again, it's a movie I've seen a couple of different times. Somebody
Mhm.
I knew wanted to see it, so I watched it. And I remember some of those scenes, having been a borrower in that environment as the run up, working with mortgage brokers and the like. So I thought maybe
Right.
Stephen Dow and I from Velocity Mortgage should just have a discussion about what is different, right? Obviously, The Big Short captures a very unique time in history where there was lots of bad actors operating. But the mortgage market today is vastly different, and a lot of that
Right.
is because of what happened.
Right.
Stephen, really quick, hit the marketing thing real quick so we can get into this Big Short discussion.
You got it. Again, although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel that of my own. So let's let's play Ebert and what was the name of that show? Can you remember the movie review show, that old one?
Ebert
Roger
and
Ebert and something.
yeah, Roger. I don't remember, but anyways, we're gonna review a
Damn
movie.
it. Okay, sorry, I'm aging myself. Yeah, this is where all that salt and pepper
Yeah,
comes
gray
in.
hair.
But yeah.
We're both 50. Yeah, even though he looks like he's 25. But I digress. When I looked at The Big Short again, I've probably seen it 3 or 4 times. Maybe this is the fifth
Hmm.
time. I just remember some of the scenes with the mortgage brokers,
Oh yeah.
and I remember mortgage brokers just printing money, right?
Right.
They were flying flashy cars. They couldn't do any wrong. And what I
Right.
didn't know at the time, because I was a customer, right? I was the
Hmm.
customer. I've never been a mortgage
Hmm.
broker. I've never been licensed. I have no interest in being licensed. But what
Right.
came out after the fact is a lot of these
Hmm.
mortgage brokers were padding their fees and printing extra money and punishing their clients, right? I'm sure my mortgage broker back in, wherever it was, probably got a little kickback or they got different things, and it allowed him or her to go buy a BMW or something. And that's not allowed today.
Well, I mean, just from the fallout of the mortgage meltdown back in '06, '07, '08, a lot of rules, laws were enacted
Yeah.
to combat quote unquote predatory lending, right?
Right.
So, different rules or laws that were enacted, such as, Dodd-Frank, um, basically sponsored by the two, I think, senators, last name Dodd, last name Frank, basically, again, is normally utilized to restrict, at least for my specific product, um,
Mhm.
to where you cannot use it on somebody's primary residence, as far
Right.
as a non-qualified mortgage. So
Right.
outside of that, or second home. But as far as other fallout from that era, I guess you could say, a lot of loan professionals were presenting the loan scenarios in a different kind of light to I guess make it look like they needed to pay those extra points in the back end or whatever the case may
Yeah.
be. But me personally, I always gave them the choice, like depending upon, well,
Yeah.
if you want to pay this, here's your rate. But if you don't want to pay that, then you could pay this rate, which then gives me that extra only 1 point in the back. So either you're paying a point in the front or you're paying a point in the back, but it just depends which was the most advantageous for you individually. So I
Mhm.
always gave them the option, but I didn't just tell them, hey, option A is all you got. And by the way, I get an extra 2 points in the back, plus I'm charging three
Yeah.
in the front, or yeah.
Yeah.
So yeah, I mean, I'm not gonna comment on somebody else's, specific behavior. Maybe there's something else that they had a business model, larger overhead. I can't really speak for certain people, but there
Yeah.
was a lot of, I wouldn't even call it professionals, a lot of licensed loan people really taking advantage of the system
No.
in a sense.
Yeah, I mean, no, it's very clear. The Big Short talks about it. I mean, there were a lot of licensed loan professionals who were not serving their clients,
No.
who were only interested in themselves, who
Well,
built
I
up
mean, there's a
big
lot of level of
businesses.
greed at every, I think,
Yeah.
at every stage. You know what I'm saying? Because again, some of the borrowers would, I mean, when I would look at loan scenarios after the damage has been done, they would come to me and say, "Yeah, this guy said this and said that," and and I would think to myself, "How old are you? Like, you think like you're gonna get a 1% for 30 years?
Yeah.
Like, I don't know what
Yeah,
you're,
the teaser loans,
and
remember those? Yeah, yeah.
right, and in their defense, a lot of times they were being bamboozled with some sort of like fraudulent like disclosure or something that would kind of,
Yeah.
or they would just spin it away. No, no, that's not the right payment. Here's the right payment. So there were some definitely bad actors, like you said,
Yeah.
that left a lot of people in bad situations and caused a lot of pain for sure,
Yeah.
unnecessarily, just again to pad their buy
Yeah.
that whatever fifth
It-
car they didn't need, or the
yeah.
whatever.
Thankfully,
Yeah,
the mortgage industry kicked out a lot of the bad actors back then. But I don't want to talk about that environment. I want to talk about what's different today, right?
yeah.
So today, I don't know what you call it, the loan sheet or cost sheet or whatever it is,
Hmm.
there are rules about how high the fees can be. right? Not only
Correct.
is non-QM not available for primary residence,
Right.
but even on a primary loan, as you know, you don't
Right.
do that, but
You're
you
limited to
know,
a maximum that you can
you
make.
you
Correct.
have cap and fees because they don't want,
Same thing.
yeah, dishonest loan professionals to pad the numbers. They're like, no, this is the max you can charge. And that's actually one of the fallouts. Let's just talk about one of the fallouts is
Hmm.
for a while, you couldn't get a home loan for less than 50K because
Right.
of Dodd-Frank, right? Because of the caps,
Right.
it was unprofitable, meaning you would
Right.
lose money doing a home
Hmm.
loan under 50K. So it's not like it was all gravy. There were some cost or detriment to the
Right.
new rules that came out. Is that fair?
For sure. Because again, like with anything, people have, good intentions with, enacting some sort of law, but in
Yeah.
some cases they may not have the foresight to understand that what they did could hinder other legitimate, just regular above water type of deals that were
Yeah.
maybe a little non-conforming in the sense of what they thought in their head should, be the protocol or the system. So there is that. But again, as things evolve over time, just certain
Yeah.
laws just are so rigid that they don't have the ability to be flexible in a sense. So until somebody kind of takes a look at that again to kind of see how that applies in current market environment and factors now, there are certain things that do limit and restrict certain borrowers that it should in most cases with those laws. So but again, I do understand what they did have to do to enact that back then, because there was, man, a lot of bad actors,
Yeah.
unfortunately. So yeah.
One of the last things, again, as a borrower and a consumer, not an
Hmm.
operator or not a licensed professional, I think is now illegal, or at least the standard has changed. And I think it's important. Back
Hmm.
in the early time frames, like these teaser loans that had high commissions,
Hmm.
the borrower was approved based on the teaser rate, we'll say 1%,
Right. Right.
not the adjustment at 9.
Right.
And thus they were okay when the rate was 1, and when it adjusted to 9, all hell broke loose.
Right.
Today, if you're doing an adjustable rate mortgage, you must be approved at the maximum rate. Do I have that somewhat accurate?
Um.
And if you don't know, it's
Again,
fine. It's fine.
yeah, I mean, as far as what uh that kind of setup, I'm not 100% sure, so I don't want to
That's
say
fine.
anything that I'm not
I know
going to be aware of.
no, it's fine. Yeah, don't answer. If you don't know, you don't know. I
Mhm.
believe it is true. I believe
Okay.
one of the largest changes is they didn't want to see mom and dad borrowers put in bad products by
Oh no,
lenders.
no doubt that part for sure. Because I
Yeah,
mean, if you
that
were
was
getting foreclosed on your primary residence, you got a ton of people in the streets. Last
yeah,
thing the government kind of needs. So yes, that's
yeah.
why the certain restrictions were enacted
Mhm.
primarily on somebody's primary residence or second home,
Exact
so
primary.
that
It was
if you
primary,
want to do
primary.
these riskier loans, I guess in
Yeah,
a sense, because they're non-conforming or
yeah.
non-conventional, then hey, we'll let you do it on an investment property, because if you lose your investment property, you're not homeless at least.
No, it
So
was
yes,
definitely primary focused. Yeah,
right,
right.
right,
Because again, they wanted people to be approved at the max rate, not the artificial teaser rate. That was a big gotcha from the last time that I believe has changed. And I don't know if
right.
this is true. And again, if you don't know, it's okay. I
Hmm.
believe Negam loans, pick a payment, I think they were called
Hmm.
back in the day,
Yep.
they're certainly not out there. At least I haven't seen one, but are they
Hmm.
illegal now? Are they like Negam loans not possible
I don't know.
or
I mean, I don't know. I think Dodd Frank probably has something to do with that as well. I
yeah,
haven't read Dodd Frank from cover to cover, but I believe that applies to as well. Um, I think it just comes down to the disclosure
okay.
process, but because I'm trying to think of any loan
I
products that kind of
certainly
fall
haven't
into
seen
that
a I haven't seen a pick a
I
payment.
haven't seen them either. So whether
Yeah.
they're illegal or not anymore, I'm not sure.
Sure.
But I'm sure it's just due to the type of disclosures. Because again, if you utilize that tool in the
Yeah.
right way, it was
Yeah.
okay. You know what I'm
Yeah.
saying? Somebody who's kind of ebb and flow with their
Sure.
income, right? Some
Yeah.
point or
Yeah.
commission based, right? Some months huge windfall, some months very little. So
Yeah.
the months are very
Maybe.
little, you go back on that interest only. But the months you're doing well, just pay down chunks of that, principal. So if it does,
Yeah.
adjust whatnot, that was the
Yeah.
philosophy behind that. But I mean, human nature around that specific time, consumer buy, 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 buy,
Yeah.
borrow, borrow, borrow. This is gonna last forever, kind of
Yeah.
stuff. So
Yeah.
that was the mindset.
Yeah. So when I kind of wrap up The Big Short, which again I saw the other day for the fourth or fifth
Mhm.
time, there's a lot of things that's changed. First off, mortgage brokers don't have the same flexibility to pad their own wallet.
Right.
They're not rewarded.
Well,
for
it's either
sitting-
lender paid or borrower paid now, where
Correct.
especially on the conventional side, so you can get both. Whereas before, you can kind of make a little bit of both. So
Double
I think
dip and
some of
yeah,
that fallout, yeah, exactly. So
yeah.
again, from the fallout of all that had happened during the mortgage meltdown, certain rules and regulations were enacted to
Yeah.
restrict
And
certain behavior.
yeah, lending is better today. The consumer is better protected today. There's a
Yes.
couple of little caveats that maybe it's harder,
Mhm.
i.e., less than 50K homes because it's not
Sure.
profitable. But
Right.
net, I think it's a better environment and safer for home buyers. Is kind of how I
Well,
wrap this up.
I agree. And the fallout from the last decade and a half of financing isn't going to be as detrimental to the market. When we're going through this other financial situation as it was previously, where people were doing short-term fixed loans,
Yeah,
2-year adjustables, 3-year adjustables, negams. I mean, that was the majority of the loans that were out there. So when the market just tanked, everybody was upside down. People were just
yeah,
walking from their property. So that's not going to be the case this time. You got longer 30-year, fixed money. The equity positions are a little bit more conservative. So there's a little bit more wiggle room for people to kind of wait it out a little bit versus before. So we'll see. It's still an interesting time. But nevertheless, I'm glad you brought it up. I haven't seen it in a while. It was kind of brought back a little bit of PSTD or PTSD because I went through it. I survived it, but it's still like,
yeah.
So
It
yeah,
was funny, right? I mean, The Big Short, for all its entertainment, but having been a buyer, like they did a walkthrough in Vegas or somewhere, like one of the things,
right,
and all of that. And then, dude, I remember this one scene in the movie where they knock on a door and a man comes with his family and
right,
says, why am I in foreclosure? And it turns out he's
right,
a tenant. And
right,
again, he's been paying his rent, but his landlord is being a scumbag and not
right,
paying the mortgage. And,
right.
unfortunately, the bank takes over. So it was not a good time. Bad
No,
loans, bad actors. It's underwriting was different. It was The
right.
Big Short. If you haven't seen it, it does a pretty good job of capturing a pretty unique time in the housing market.
Oh, agreed. No, no. I mean, there are certain scenes when they're, showing, loan officers talking about, oh, I don't get a, I forgot the actual, dialogue, but it has something to do with, they don't,
I
do a
don't
loan
roll
for
out of
less than
bed.
this money,
Yeah.
or basically like the supermodel kind of thing. Like, I don't roll out of bed for less than $1 million kind of thing. You know what I mean? So
Uh,
it was just, people were just really, you know, greed at every level. That's how I say it. But yeah, unfortunately, there were certain people definitely that were relying on these quote unquote known professionals to steer them in the right way, trusting in
yeah.
them. And unfortunately, just some bad stuff. But we're all past that now.
Oh
Market's
yeah.
different. We're still
Yeah.
around,
Yeah.
highly rated, 30-year fixed money.
No,
So,
again, the operators today are in a vastly different space. The rules of the game are more restrictive. I think the consumer is more protected. But again, having watched The Big Short, you and I went through that as I was borrowing money. You were, I mean, we all know there were some actors out that were out for themselves. And,
sure. But it's good
yeah,
with this channel though, because I think your channel does enlighten people and educate people as well, so that they kind of know a
don't
little
get
bit
stuck.
better for the most
Yeah.
part, at least from what we get to talk about with my niche product. So I think they're a little bit more,
Oh, yeah.
educated on what options versus like, oh, this loan professional is telling me, okay, I'll just take what he says at
Yeah.
face value. You know what I mean? So,
Don't do that.
YouTube and a lot of information out there has really helped the common, consumer to be a little bit, better informed so that they can make the right decision. So now this is a whole different time, but yeah, it's funny. I haven't seen that movie in a long, long time. So you just,
Yeah.
you just bring it up. I'm like,
Throw it on
wow.
loop this weekend. Yeah, it was entertaining to watch. The first time though, I got to tell you, I couldn't watch it all the way through. It was too real.
No, I mean, I lived through that, man. I'm telling you,
Yeah.
it was bad. It was not good. So I was just like probably one of
Oh,
the worst times in my adult life, from a
yeah.
professional standpoint, because there was really,
Yeah.
I mean, I went to go sell hair care product.
Yeah.
So that'll tell you where I shifted out of the market and then jumped back in when it got better. But
That was
yeah, that
tough.
was a bad time for a lot of people in the market. But anyway, man, if you need to get in touch with me, just email me to sdao@velocitymortgage.com. In the body, or at least the subject, probably put ORAAT, which stands for one rental at a time. Body of the email. If you want to talk about the movie, fine. If not, just tell me what it is that you're looking for or what you'd like to do. Property type would be great. Obviously, address, at least city and state to make sure I can lend there. Your mid FICO
Yep.
score, best phone number to reach you at. I'll be in touch in 24, 48 hours.
Awesome, buddy. Thank you so much.